Welcome to the channel. My name is Jodie Knight. You can find my live portfolio over on eToro. The link is in the description below for that. But in this video here, we're going to talk about PayPal's price action. We're going to look at the daily chart, the weekly chart. We're also going to take a look at the open options interest. As well as that, we'll talk about my price targets, where I'm going to add, where I'm going to trim, all that good stuff, fair value and all that. On top of that, though, we're going to have a quick look at the general market, what's happening. We're going to look at the economic data from yesterday and what's coming today. And then also we'll take a look at some PayPal news if I can find any. If not, we'll find something else interesting to talk about briefly. All right, jumping straight in, all aboard the pain train, as they call it. I don't actually know what all the FUD is for the last few days with PayPal. We've had an incredible move from the lows here, this double bottom to where we are now. 38%, that's pretty impressive for PayPal. My weighting going into this is 11.23%. So I'm happy with that. I'm not too concerned going overweight until we get over $100. I think, it's a pretty safe bet that's going to happen. My fair valuation is $124, so there's that extra bit of margin there as well. That is a 58% rise from today's price. So price has had a really good pullback here. I'm not going to add to this one. I took some trimming out at this level. So price, I think, ran a bit ahead of itself prior to earnings. It needs a bit of a cool off. We had the bearish divergence and all that stuff. So, we're kind of neutral on the RSI now. So I like that. I've had a good reset there. Flows also reset. So we could go up, we could go down. Personally, I'm not adding to this position currently. I'm quite comfortable with where I am size-wise on this one. I think the company's doing excellent. The earnings call was actually pretty good. They were very honest. They talked about sacrificing short-term revenue for long-term gain as well, which I'm very happy with. I think 2025 is going to be the year when things really start ramping up for them. So all in all, strong quarter. Don't really know why everyone's so negative on it still. But, we carry on. So we talked about, I would love price to fall back down here, back to this gap fill, $73. I don't think it will, but I would love it. I would love it even more if we got down to this previous gap and the bull market band, so kind of in the really low 70s range. I would definitely ramp up my position into that one, give it some strength. Other than that, though, to the top side, next kind of logical level to look at is this $90 area. I might, if we do have a pullback and I load up, I will have to trim at 90 just to make sure I'm not getting massively overweight on that one. But if we don't get a pullback, I'm just going to be happy to ride this one. I don't really want to chop in and out of this one too much. On the weekly, resize my charts. Again, things look pretty good. We've definitely confirmed a reversal here, but we could have a bit of a pullback. A cup and handle here would not be such a bad pattern to honour. A measured move on that one would be quite nice if we just stick one in. If you can find the arrows. Let's do a relatively conservative one, shall we? If we did have a cup and handle pattern, kind of gets us to the 110 range. So that'd be very nice to have. The RSI in the weekly is also hot. So again, I would expect more of a pullback here. We had overbought on the MACD Plus and flows kind of stalling out. So some cooling is to be expected, especially when we've had not a super bullish earnings. Taking a look at the open options interest for PayPal for the remainder of this week, so pretty much just Friday, we've got quite a lot of bullish expectation on this one. The expected move is relatively small though. However, look at that really strongly picked out point there, 70 kind of 5, between 72 and kind of 75. That 72, I believe, is roughly where the gap fill is, the one that took us a long time to get over. So it makes sense why people would pick that out as a kind of rebound area. I wouldn't expect us to get that low in a day, though. That would be a bit of a shock, pushing out a week. So price is kind of locked in here unless something substantial happens in the market, like, I don't know, an election. I don't think price is going to move too much. I think the entire market's probably going to move at some point with the election, depending on who wins. I think It's tough to say. I think Harris will create a bit more of a short-term dip, where I think Trump will create more of a short-term pump. But I think both will balance out eventually, um, when things just, all these exciting policies the one to implement probably won't happen for a while, if at all. So something to bear in mind. Let's take a look at January 2025. That's coming up in a couple of months. So by the time that rolls around, the market is looking incredibly bullish on PayPal for the beginning of 2025. So that's something to bear in mind. A lot of the bigger funds have that expectation. Sticking points, $100 as usual. That's not changed for a long time, and kind of 140, 145. Now, I think some of these strikes will be toast. I wouldn't expect that to happen in 2 months, but maybe 100 is quite ambitious for a few months as well. But we'll see. These prices seem more in line with what I would expect in 2026 towards the end of it, given the turbulence the market's experiencing. But we might have a really good Santa rally. January 2026. For some reason, the strikes aren't showing higher on here. I don't know why. It's been doing that for a while, but we've still got a lot of room to work. Either way, the market is positioning with a bullish tilt on this one. There's barely any interest in shorts on this one. A lot of these are already in the money, so they're happy to ride it. News-wise for PayPal, we had the earnings a few days ago. I think it was a few days. It was Tuesday, wasn't it? I put a full article on my website, thecraftytrader.com, along with a full breakdown of SoFi earnings and Tesla earnings, all for Q3. But I just wanted to quickly show you what it kind of looks like on my website. So we've got all the highlights in there. We've got all the metrics that you want to see. I've even drawn pretty little green arrows to show what I like and what I don't like. And there's very little red on these. The take rate is still an ongoing issue, but it does look like it's stabilized, which was great to see. There appears to be inflection in a lot of levels that we're looking at on this one. Obviously, revenue was a bit of a shortfall, but they've explained why that is. Oh, I can see I've made an error there. I've not put on what I wanted to, so I'll go back and sort that out, but never mind. So what I didn't like, as we just talked about, the take rate and transaction take rate down again, but marginally so. I expect that to improve in 2025 with the ads business and all that good stuff. Still a bloated head count when we looked. I think they did 9% cuts last year, but they need to be more aggressive on that one, I think. Analyst guidance looks good. Their guidance, they did guide lower for revenue, which I think was one of the things that the market was really focused on. They expected, rewards now, but revenue's still decent. Everything else was raised. They're still committing to completing the $6 billion buybacks for the year. Institutional ownership was down as well. We can see that in the charts on visualcharts.com and also in the Fintel charts here as well. So just wanted to show you this, a quick run through if you want to get really nitty gritty on there. But I think the Cliff Notes version is I'm still really bullish on the company, still expecting great things in 2025. It's been a really good year for them to set a good foundation which they can build upon. Very excited. Macroeconomic data, we had the ADP employment change yesterday. We talked about that as well. That came in really strong, probably quite large contributions from seasonality and the hurricane. We've got to rebuild everything, so a lot of jobs will be offered there. So that's probably bumping that one up quite nicely. GDP growth rate came in slower than expected, but I think this 3.3 was probably quite ambitious. It's nice to see the growth rate kind of stabilize into something normal. Price indexes as well, they came down, so inflation not really an issue there. Core PCE price indexes also came down. Awesome. GDP sales quarter over quarter up a little bit. PCE price indexes quarter over quarter advance came down a little bit. So prices looking good. Consumer spending, that was up. That's interesting when everyone's saying that the consumer's getting weak and they're spending more. We could get a revision, but for the time being, it looks strong. Obviously, with this, we have to account for some seasonality. We're getting into, the holiday season and all that good stuff. Home sales, not too worried about home stuff yet. I think we're still too early for the housing market to pick up. So then we're on to today's data. We had the Challenger job cuts, way less jobs getting cut. That's good. people not getting sacked is always a win. I didn't on the earnings calls that I've been in. I hadn't really heard much mention of job cuts either, which actually annoyed me with PayPal. But they have such a big workforce. Maybe they're just gonna start teaching them new job roles. Core PCE price index month over month. We had that. That one's a little bit hot, but month over month, I'm not too fussed about as long as we're trending downwards overall. Personal income month over month came up, so that's a little bit inflationary, but the spending was higher, so that was better. Employment costs pretty much on par, lower than previous, which is nice. So that's always something to bear in mind. We're looking for it to be not necessarily be as forecast like a lot of people are. It's more against what it was the previous read. So bear that in mind. Initial jobless claims came in lower, which is good. So we're definitely seeing some softening in the markets, but resilience, definitely resilience in the jobs market at the minute. But I think that might be a short-term kind of issue, or a perk, should we say. Other than that, though, I think we're good to go. The market's selling off quite a bit lately. Big tech earnings have been okay, but given the price movements we'd seen prior to this, maybe the expectations were a little bit too high. And with the elections next week, I believe they are. I think people will be wanting to take that risk off the table. I have been buying the dip, so I've been adding to my risk, which hopefully pans out for me. Right, that's it from me. It's getting dark. I'm going to get ready for the trick and treaters around the village. So if you enjoyed this, give it a like, share it with your mum, your dad, your nan, your gran, your dog, and subscribe to the channel. And I'll see you Monday for Clean Spark and Bitcoin weekly updates.